let's go to the next one, that is rule number 3, which is talking about the definitions. Okay, now here 2 definitions only we are going to do because these are the important ones. One is the definition of Nidhi. So any company which is incorporated as Nidhi, okay, any company which is incorporated as a Nidhi and it has the objective of cultivating the thrift. Thrift is like we say na conjuice, like we are trying to save more money, right? We are trying to expend less and we are trying to save more money. Okay, cultivating the habit of thrift and saving among its members, because Nidhi tells its members that whatever extra funds you have available with you, please share that with us or please deposit that with us. So Nidhi is encouraging members, Nidhi is telling people that please save your money and deposit that money with us. Okay, and whatever money the Nidhi is going to get, Nidhi is going to accept that as deposit and it is going to lend it to its members who need money. Okay, one very important thing to be kept here in mind is Nidhi works only with its members. Okay, Nidhi company works only with its members means what? Nidhi accepts deposits only with its members and it gives loan only to its members. It cannot deal with any outside person because here the main motive is mutual benefit. Okay, mutual benefit means only Nidhi company should get benefited and only its members should get benefited, not any third person. I hope you are very clear with this. Yes, so this is nothing but the definition of Nidhi. Okay, this is the definition of Nidhi. Now, similarly, later we are going to get a term called as net owned funds. When we proceed ahead, we are going to get this term called as net owned funds. Okay, so what do you mean by net owned funds? I'll just give you a simple definition. Net owned funds is equal to paid up equity share capital. Okay, paid up equity share capital plus free reserves. Okay, only equity, because we'll study later on for Nidhi is now not allowed to issue preference shares. So if it is not allowed to issue preference shares, then its share capital is going to consist only of equity. Okay, so equity share capital plus free reserves minus the accumulated losses and minus intangible assets. By doing this, you are going to get your net owned funds of the Nidhi. Are you clear with this? Yes, just remember this thing, paid up share capital is just going to consider the equity share capital. This is your free reserves. Out of the free reserves, we have written off 2 things. One is accumulated losses and the other one is your intangible asset. This is the definition of the term called as net owned fund. This definition is to be remembered. Okay, this definition of net owned funds, this we have to remember mandatorily. Yes. Okay, now listen. You will find 2 rules coming up now. One is rule number 3A. See what I have written there. Not included in the ICAI module. Not included in the ICAI module. Okay, so this I have just put it in your book because it was there in the bare and there was some amendment in that. So I've just put it in the notes. By chance, if your ICAI notifies it in the RTP November 22 or ahead, then at least you have the content ready with you. Okay, rule number 3A and 3B was not at all put by your ICAI. So we are not sure whether they are going to make it applicable for the exams or not. So I've just put the theory. Don't study it now. Okay, isko abhi nahi padna. You don't have to read it now. Just let it be in your book. Okay, if at all ICAI notifies it by way of amendment or RTP etc., then we'll come and study. Okay, so directly come to rule number 4. Everyone here, come to rule number 4. Yes, can we go to rule number 4? Everyone here. Rule number 4, it's already written there. This rule is important. Okay, don't skip this point. This rule is important. Now listen, they are talking about incorporation. I'll just tell you here itself. You'll understand it in a very easy language. Rule number 4 talks about incorporation of Nidhi. Okay, it talks about incorporation of a Nidhi company. So now, first of all, Nidhi should always be incorporated as a public company, and that is mandatory. Okay, that is mandatory. Another thing, Nidhi should be having equity share capital only. As I just now told you, preference is not allowed. It is going to have only equity share capital. So minimum equity capital is equal to rupees 10 lakhs now. Earlier it was 5 lakhs. Okay, so this is one point which got amended. Now the minimum equity capital is equal to rupees 10 lakhs. Now it is, earlier it was rupees 5 lakhs. Okay, so whenever you do question answers, whenever you try question answers, make sure that you mark the amended answer. Okay, make sure that you mark the amended answer. So this is going to be your minimum equity capital. But then they have put a point there. The companies which were existing, okay, as on 19th April 2022, that is the day when these rules came into picture, they will have to, it's not that right from next day only they will have to increase their capital. That is not practically possible. So they have got a transition period of 18 months. Within 18 months, they have to get it increased from 5 lakh to 10 lakh. For all the existing company, obviously we'll have to give them some transition, because otherwise it will become very difficult for them. Right? Then this point we have already done. It cannot issue preference shares, because we have already seen it should be having paid up equity share capital. Okay, another thing, do you recollect a point which I told you, mutual benefit only? Means Nidhi can function only with its members. Right? Nidhi can function only with its members. It can operate only with its members. It can accept deposit only with its members. It can give the loans only to its members. Very clear with this? So it can deal only with its members. Right? And then the next one. Everyone here, just try to understand. Now they say that it may also provide locker on rent facility to its members. See, what is its main objective? What is the main objective of Nidhi? Main objective of Nidhi is receiving deposits from its members and lending the amount to its members. एक जगह से ले लो, दूसरे जगह पे दे दो. Take it from one place, give it to another. Right? That is the main purpose. But then additionally, it can also provide locker facility. Okay, additionally, it can also provide locker facility to its members. And so it will be charging rental income from them. So that should be less than or equal to 20% of the gross income. Means whatever is the total income of Nidhi, out of that only maximum 20% can form part of this rental income. So what are they trying to curtail? Restriction, what restriction are they trying to place? They are trying to say that this should not ultimately become your main thing. Okay, this should not become your main thing, and that's why the income from this activities should also be restricted. That is one thing. And then they say that every Nidhi company should have the words Nidhi Limited. Okay, it should have the words Nidhi Limited in its name. These are some important requirements for incorporating a Nidhi company. I hope you are very, very clear with this. Okay, I'll just repeat it. Which company should it be? It should be a public company. It should, in its capital, it should be having equity share capital, minimum rupees 10 lakhs now. Because it got increased from 19th April 2022. If it was a company which was formed which was existing as on 19th of April, then you get a time period of 18 months of transition to increase it from earlier 5 lakh to new 10 lakhs. And its name should have the words called as Nidhi Limited. Okay, and yes, most importantly, because of equity, you should be knowing one thing: it cannot issue capital. It cannot issue the preference capital. Very, very clear with this, everyone? Yes. Okay, so now let's go to the next rule, that is your rule number 5 and rule number 6. These two, especially rule number 5 is specifically important. Yes, it's written also here. So now what are they saying? There are certain requirements which every Nidhi company should fulfill within 1 year of incorporation. Means they have given a transition time period again, that okay, if you incorporate it today, it's not possible that you can meet all the requirements right from day 0. So you have been given 1 year time. You have to make sure that 4 conditions are fulfilled. Okay, 4 conditions should be fulfilled within 1 year of incorporation. That is at least 200 members. Okay, first of all, at least 200 members should be there in a Nidhi. Another thing, you recollect that net owned funds, paid up equity capital plus free reserves minus accumulated losses minus intangible assets. That net owned fund should be more than or equal to 20 lakhs. Earlier this was 10 lakhs. Okay, old figure was, this was 10 lakhs. Now you should be having 20 lakhs from the date of incorporation, within 1 year from the date of incorporation. Okay, then whatever are your outstanding deposits that you have to pay back to your members, okay, into 10%. Means whatever is your liability into 10%, at least 10%, that much amount should be kept aside as unencumbered term deposits. Means this much amount. Suppose if I have to repay back 100 rupees of deposits to my members, then at least 10 rupees should be kept in your asset side called as unencumbered term deposit. Means you have to keep it with some scheduled bank. Okay, that is your safety money kept against liability of 100 rupee. I am keeping 10 rupees in form of term deposits. Very clear with this? Right? And the last one, ratio of net owned funds upon deposits. Okay, net owned funds upon deposit should be maximum 1/20 or 1:20. Means the deposits which I have given, or means which I have accepted from my member, that is my liability, that should not exceed 20 times of my net owned funds. See, net owned funds is my ultimate capacity, right? Net owned funds is my ultimate capacity. So the deposits which I have raised from my members, which I have to ultimately repay back to them, that should not exceed 20 times of my capacity. Okay, that should not exceed 20 times of my net owned funds. I hope I am very, very clear with this, everyone. Yes. Okay, so these 4 conditions should be met by every Nidhi company. Okay, this should be met by every Nidhi company within 1 year of the date of incorporation. Okay, so now let's go ahead. These were the 4 points which we just completed. Now you have got some compliances part coming. Not very, very important, but let's just try to understand. What are they trying to tell us here? Now, within 90 days from the close of the first financial year after its incorporation, and wherever applicable the second financial year, Nidhi shall file a return of statutory compliances in form NDH1 along with such fee as provided in the Companies Rules 2014 with the ROC duly certified by CSCS or a cost accountant. So basically a return in which form? In form number NDH1. Okay, every company will have to file this statutory compliances form in form NDH1 within 90 days from the close of the first financial year. See, why have they mentioned about the second financial year? Suppose if any Nidhi company just got incorporated, say for example on 1st of February, then instead of closing the books on immediate 31st March, it can close on next 31st of March. So this becomes the second financial year. Okay, so normally within a time period of 90 days from 31st of March. Okay, from within a period of 90 days from the close of first financial year, you have to file NDH1 that yes, you have met with all the statutory compliance. This you have to go and submit it to the ROC. Very clear with this? Okay, this was one thing. Another thing, suppose if Nidhi is not able to comply with first point and the fourth point, that is with this 200 members condition or with that 1:20 ratio. If it is not able to comply with this, then within 30 days from close of the first year, see, you have to do it within 1 year from the date of incorporation. If you're not able to do it within 1 year from the date of incorporation, then within 30 days from close of the first year, go and make an application to the regional director in form number NDH2 that sir, we need some time to comply with either of these conditions, and then the regional director will file the application and it will pass the order within 30 days. Okay, and it can provide you extension of a period of 1 year up to a period of 1 year, that okay, we give you extra 1 year time period to comply with these clause A and clause D. Okay, means this also means that clause B and clause C, okay, that is your net owned funds of 20 lakhs, and clause C means that 10% has to be put in unencumbered term. Those two, B and C, has to be complied compulsory. When we talk about A and B, okay, you can go and make an application to the regional director that sir, we need some more time, so please grant us some more time. Very, very clear with this, everyone? Yes. Acha. Now listen. Suppose if any Nidhi company is not able to comply with any of those 4 clauses. See, for A and D, you can get extension. So, no problem in that. Okay, you can get an extension of up to a period of 1 year also. Maximum up to a period of 1 year. You had to comply all this within first 1 year of incorporation. You can get an extension for those 2 things again for a period of 1 year. Right. So, ultimately, till the second financial year, everything should be complied. Till the end of second financial year, everything should be complied. If you do not comply even till the end of second financial year, then they say that you cannot accept further deposits from the start of second year. See, I'll just show it to you, everyone here. My Nidhi got incorporated on 1st April 2021. So, I should have done this till 31st March 2022. Correct? Within 1 year. Now here, if you are not able to comply, then for at least for A and D, you go and seek for extension. You should be already knowing that by 31st March, I have not complied it. So from the start of second year, you cannot accept deposits till the time you have complied with all the provisions. This is the punishment given to you. Okay, this is the punishment given to you, that you cannot accept deposits. You can continue other things, but you cannot accept new deposits from the start of the second financial year. Okay, because at the end of first financial year, you would have come to know that you have done the mistake. Yes. Until when you cannot accept the deposits, till the time you rectify everything. Very, very clear with this, everyone. Are you clear with this? Yes. And then they say that the provisions of this rule, that is your rule number 5, this shall not be applicable for the new Nidhi companies. New Nidhi companies means on or after 19th April 2022, these rules, this entire rule of 200 members and all these things won't be applicable. Are you clear with this? Filing NDH1, statutory compliances, going and making an application to the regional director, etc. These points won't be applicable. Yes, there will be some rules. Example, unencumbered term deposit. These will be covered in other rules. So those rules will be applicable. Okay, but this NDH1, NDH2, etc. These won't be applicable. Are you clear with this? Yes. So first of all, NDH1 you have to go and file. That is talking about the statutory compliances within 90 days from the end of the first financial year or second financial year, as the case may be, whichever is the first 31st March that on which you're going to close your book. Then for clause A and D, if you're not able to comply within a period of 1 year, which you had to do, if you're not able to do, then go and make an application to the RD. If RD is satisfied, it will grant you the extension. Okay, extension can go up to 1 year. Achha, normally they say that all A, B, C, D were supposed to be complied within 1 year. If you're not able to do, then from the start of second year, from this, you cannot accept any new deposits. Are you clear with this? Chalo, then let's move ahead. Next, we'll go to your rule number 6. Okay, rule number 6, not very, very important, but yes, to be studied. Now, this is basically talking about what things the Nidhi company cannot do. Okay, what things the Nidhi company cannot do. So, it cannot issue preferences. It cannot carry on the business of, it can just carry on the business of Nidhi company. Chit fund is not allowed, hire purchase is not allowed, other finance business is not allowed, insurance business is not allowed. It cannot deal with other than its members, because it was allowed to deal only with its members. Right? So other than members is not at all allowed. Right? It cannot engage itself into any other activities, but there was one exception, that rental thing was allowed. Remember? It can provide locker facility on rent, but the rental income from that should not exceed 20% of the gross income. Then this one had got amended. It cannot acquire or purchase securities of other company or control the composition of board of other company in any manner whatsoever, or enter into an agreement for change of its management. So it cannot show its interest in other company, it cannot control the board of other company, it cannot do the changes in its own management. Like some outsider should not interfere in doing the changes in its management. So this is a nice point, amendment point, which has come up here. Right? Then it cannot raise loan from banks or financial institution or any other source for the purpose of advancing loan to members of Nidhi. Now see, if Nidhi wants to give loan to its members, it can use which money? It can use money which it has got from its members only. You cannot do that. You are taking a loan from a bank and then you give that as loan to your members. No, that is not allowed. Which money should flow from one person to another? The money which we have received from our members should go to the members who wish to take the loan. So outside involvement not allowed. You cannot get interested in any other company. You cannot issue shares, preference shares. You cannot deal with any other person. You cannot accept deposits or give loans to any other persons. Okay, you cannot engage yourself into any other activity except locker rent facility is allowed. 20% that thing. That is allowed. Very clear with this? Chalo, now, so let's go to the next rule here. That is, rule number 6 we have already completed, which was talking about the restrictions. Right? What Nidhi company cannot do. Not very, very important. I have already told you what is to be done in that. Amendments and the 20% point. Okay. Now going on to rule number 7, which is important, which talks about the share capital. Right? That talks about the share capital and allotment. Now, let's try to understand this. First of all, Nidhi company, what you have already studied about share capital is, Nidhi company can issue, since it is form of a company, it should have a share capital, it can raise money only in form of equity share capital. So, it can raise only fully paid up, first of all. It can raise only fully paid up equity shares. Okay, only fully paid up equity shares, and its face value, nominal value should be at least ₹10. Normal, okay, very simple. So, Nidhi company will take the money from its members, it will issue shares to them. Okay, when it is issuing shares, it cannot charge any service fee. Okay, it cannot charge any service charges just for issuing the shares, that is not allowed. Okay, so this is one important point to be remembered here. Another thing, every Nidhi company is going to have Deposit holders also. See, one is I become the member of a Nidhi company. Then I either give the deposits to the Nidhi company or I take the loan from the Nidhi company. Okay, if I am a deposit holder, after becoming a shareholder, if I am also a deposit holder, then I should be having at least 10 shares. Okay, then I should be having at least 10 shares or whatever number of shares, but minimum 100 rupees shares. So if I am having 10 shares, minimum face value of one share was 10 rupees, this also becomes 100 rupees. So one share of 10 rupees, you should be having at least 100 rupees of shares. Very, very clear with this. This is your minimum face value. Face value can be more also. So in case of numbers, you should be having at least 10 shares, or in case of value, you should be having at least rupees 100 worth of shares. Very, very clear with this. Any kind of deposit holder. You can be a saving deposit holder. You can be a fixed deposit holder. You can be a recurring deposit holder. It can be anything. Okay, it can be anything. But now they have put a proviso here. Okay, just try to understand. The proviso is saving account holder and a RD account holder. They shall hold at least one equity share of rupees 10. They should be having at least one share of 10 rupees. Okay, now the interpretation of this point is not very clear. So what has your ICI assumed? That this is minimum thing that you have to hold. Either 10 shares of 10 rupees each, at least 10 rupees each, or whatever number of shares of at least worth rupees 100. ICAI has assumed that saving deposit holder or a recurring deposit holder should have at least one equity share of rupees 10. So they are saying that this should be in addition to above. Okay, in one of the case study based MCQ, they have done this treatment. So this is how your ICAI has assumed. That not for fixed deposit holder, only for saving deposit holder and for recurring deposit holder, it should be having one share. Very clear with this, everyone? Yes. Okay, so this was all about your rule number 7. Okay, so let's go to the next rule now. Rule number 8 is important. Rule number 9 is again important. Okay, 9 we have done actually. Rule number 8 also partially we have done. Do you recollect we had studied that number of members in case of a Nidhi company that should be at least 100. Okay, that should not fall below 200, not 100. That should not get reduced below 200 at any point of time. During the entire year, it should be maintained at least 200. Okay, now listen. Body, corporate or trust, they cannot be a member. So only individuals can be a member in a Nidhi company. Minor can also not become a member because he cannot enter into a contract with the Nidhi company. But deposits can be accepted in their name. Example, father doing deposit in the name of his minor son or minor daughter. That is okay. Okay. And then this was the amendment. This is important. A member shall not transfer more than 50% of his shareholding as on the date of taking loan or making a deposit during the subsistence of such loan or deposit as the case may be. So what are they trying to say? If suppose I am a member of a Nidhi company, okay, I am having, say for example, 1000 shares in the Nidhi company. So I was a 1000 shareholder on the date of either taking the loan or giving deposit to the Nidhi company. So during that time, my loan is there with the Nidhi company, or during that time, the deposit is there with the Nidhi company. During that time, I cannot transfer more than 50%. You can transfer maximum up to 50% of your shareholding. See, because it becomes questionable that why do you want to leave your holding in the company when you are already associated with the company in form of loan or deposit. Okay, and along with this, at the same time, you have to maintain the minimum number of shareholding that was required as per the above rule. Right? So what we did here in rule number 8, that was first of all number of members. Number of members should not fall below how much? It should not fall below 200. Means at any point of time, you should be having 200 members in your Nidhi company. Body corporate or trust cannot become a member. Minor cannot become a member, but deposits can be accepted in his name. Okay, in his name, the deposits can be accepted, and during the time the loan is going on with the Nidhi company or deposits is going on with the Nidhi company, you cannot transfer more than 50% of your shareholding. Okay, transfer of more than 50% of shareholding is not allowed. Very, very clear with this, everyone? Okay, and then let's go to the next rule, that is rule number 9, which talks about the net owned funds. Can you recollect the definition of net owned funds? Net owned funds was your paid up equity capital plus free reserves minus accumulated losses minus intangible assets. Okay, as per the latest audited financial statements, that should be minimum rupees 20 lakhs now. Earlier it was 10 lakhs, right? So now it should be 20 lakhs, and the companies which were already there, they were given a transition period of 18 months to increase it from 10 lakhs to 20 lakhs. So this is nothing new, this we have to do. Okay, now this rule, this is contained in rule number 9. Okay, everyone here, I'll just show you one thing. Remember, they had told for rule number 5 that this rule is not applicable for the new Nidhi companies. Provisions of this rule. So now see, one of the point in this rule was not less than 200 members. Now this is already covered in rule number 8. So rule number 8 will override rule number 5 and it will be applicable to every company. Similarly, net owned funds of 20 lakh or more, this is already given in rule number 9. So this will also be applicable to every Nidhi company. Okay, any such point, any such pointer which is not covered in any other rule, that won't be applicable to the new Nidhi companies. Yes. So maintaining the number of 200, net owned funds of 20 lakhs, this will be applicable to everyone. Can we go ahead now? Okay, so let's start with rule number 10 now, which is talking about branches. This was newly inserted by your ICI in your syllabus. Rule number 10. Basically, it is talking about whether a Nidhi company can open its branches. Okay, that is one thing. And if yes, if it can open, then what are the restrictions? What are the compliances for that? So first basic important condition is, yes, branch can be opened. Okay, but it's net profit after tax. It's net profit after tax. It should be having net profit after tax for the last 3 financial years. Consecutively, continuously during the preceding 3 years, it should be having profit. Basically, it should be in profits. Okay, basically it should be in profits, then only it can open its branches. Okay, and it can open its branches within the same district in which it is located, and maximum 3 branches. Okay, within the district it can open maximum 3 branches. If it wants to open more than 3 branch within the district, because it was allowed only within the district, right? Or if it wants to open outside, the district, then go and make an application to whom? Go and make an application to the RD in form number NDH2, and an intimation will be given to the registrar that we have opened this branch, and you have to intimate within 30 days of opening. So basically, if you want to open more than 3 within the district, or if you want to open outside the district, just communicate this fact to the regional director in form number NDH2. Okay, but what is not allowed here is, wherever they are writing outside district, but it should be within the state only. Okay, it should be within the state only. Now, say for example, if I am in Maharashtra, my Nidhi company's head office is in Maharashtra. Then say for example, if I want to open in Mumbai, then I can open up to 3 normally. Okay, I can open up to 3. If I want to open in Thane district, okay, that is outside the district but within the state, I can do that, just intimate the RD. But if I want to go and open in, say for example, Ahmedabad, Gujarat, then in that case, that is not allowed, because opening the branches outside the state is not allowed. Means within district is allowed, outside district, within state is also allowed, but outside the state is not at all allowed. Okay, and then next thing that they say us here is, it cannot open branches anywhere if it has not complied, it has not filed the financial statements and annual returns with the ROC. Okay, just like we used to do section 92 or section 137, that should be complied. Similarly, here also it should file the financial statements with ROC or the annual returns with the ROC. There should be no non-compliance with that. Then in that case, it can. If it has not filed, it cannot open any branches. Very, very clear with this, everyone? Yes. Okay, so till here, let's see it once. First of all, it should be having continuous profits during the last 3 years. Within the same district, it can open up to 3 branches. If it wants to open more than 3, or if it wants to open in other district of the same state, go and intimate the RD in form number NDH2. Outside state is not at all allowed. Very clear with this, everyone? Yes. Okay. Then see the amendment point coming up here. What are they trying to tell us here? A Nidhi shall not close any branch unless it is approved, the proposal, that how are we going to repay how are we going to recover the loans, or how are we going to repay the deposits. Unless that plan is approved by the board at the board meeting, you cannot close. Discuss that how are you going to close your books of this particular branch. Then take the prior approval of the RD again in the same form, that is NDH2, at least 60 days before the closure. Okay, and within 30 days, RD will say that whether you can close it or you cannot close it. Okay, give an advertisement of this, that you are going to close the branch. Okay, this has to be done by putting it on the notice board of the Nidhi as well as relevant branch, which is getting closed for a period of at least 30 days. That you are going to close this particular branch, and then give an intimation to the ROC within 30 days. Once you have closed everything, see, you took the permission before 60 days prior. Then once everything is done, within 30 days, again intimate to the ROC that we have closed everything properly. Okay, so it is not easy to open, plus it is not easy to close as well. Right? Okay. Then after that, any place not being a registered office or a branch where a Nidhi carries on its operation, means it is not a branch also, it is not your main office also, but it is just an extra place where a Nidhi is conducting business, please close it. We don't want any such place. Either it should be a registered office or it should be a branch. If you have any third place available, then close it within 6 months from 19th April 2022. Means when these new rules came into picture, then they told that we don't want any third place. Either it can be a registered office or it can be a branch office. Very, very clear with this, everyone. Opening was important, plus closing also becomes equally important. Okay, so now let's start with the next rule, that is your rule number 11. Again, rule number 11, we have already covered it. Remember, you cannot exceed 20 times beyond your capacity. That point, that is important here. That is the ratio of your deposit should not exceed 20 times of your net owned funds. Very clear with this? Deposits that you are accepting, that should not exceed 20 times of your net owned funds. Okay, so deposits is equal to 20 times of NOF. So NOF divided by deposits is equal to 1 upon 20. Right? Okay. Then after that, going to the next one, rule number 13, which is talking about deposits. I'm making a summary for it, everyone here, along with me. This is very, very simple. What are they trying to say here is, whenever a Nidhi company has accepted deposits, okay, whenever a Nidhi company has accepted deposits, deposits can be of three types. Okay, deposits can be of three types, which I have already mentioned. It can be saving deposits, or it can be recurring deposits, or it can be in form of fixed deposits. Right? Whenever someone comes and gives the money to the Nidhi company, then at that point of time, Nidhi company will ask you, in which deposit do you want to put your money? Just like we do it with banks. Right? Now listen, for fixed deposit, there is a time period, minimum 6 months, maximum 60 months. Means you have to keep the deposits for a period of 6 months minimum, and it is going to mature at the end of 60 months. Okay, similarly, for recurring deposits, it is minimum 12 months, which can go up to 60 months. Okay, 12 months to 60 months. For saving deposit, it is on demand. Whenever you want to put, whenever you want to withdraw, you can withdraw, just like our saving banks. Very clear with this? Okay. Now listen, just try to understand. For savings, what they say is, for saving deposit, we are going to get interest. Okay. So that for the purpose of paying you interest, maximum balance in your saving deposit account will be considered as 1 lakh. For the purpose of paying interest, that balance amount will be considered as 1 lakh. Suppose if I am having saving balance as 5 lakh rupees, then too, for the purpose of paying interest, I will get interest only on maximum rupees 1 lakh. Okay, so adverse for us and favorable for the Nidhi company. Right? And whatever rate of interest you get it from the nationalized bank plus maximum 2%. This is the rate that we are going to get from Nidhi company. Okay, what happens in banks is this limit is not fixed of 1 lakh. Okay, but here the limit of 1 lakh is fixed. So what they have done is they have increased. They say that it can be increased by maximum 2% over and above the rate of interest paid by the nationalized bank. Very clear with this? And for this, your rate of interest should not exceed the maximum rate as prescribed by the RBI. Whatever RBI says, for the maximum that much you can pay on these recurring deposits or fixed deposits. Very clear with this? Yes. Now there are some additional conditions for these two. Okay, savings is done altogether. Now there are some extra conditions for recurring deposits and fixed deposits. Everyone here, just try to understand. Now they say that, remember, minimum period for both, minimum I'm telling you, was 6 months. For one it was 6 months, for another it was 6 months, for another it was 12 months. So minimum becomes at least 6 months you have to keep your money. So if someone comes and asks the money in the first 3 months, so Nidhi will say that no, not allowed. Means the money is locked in for a period of 3 months. Although that was 6 months, but for the first 3 months, you cannot, Nidhi company will not pay you any of your deposits back. For 3 months, your entire deposit amount is locked. It is blocked. A Nidhi shall not repay any deposit within 3 months. Okay. Now, suppose if someone asks you after a period of 3 months, then also we will say, okay, if you are taking it after a period of 3 months, then too, no interest. We will give you money. We will give you the principal amount, no problem in that. But no interest for 6 months. For first 6 months. You are not going to get any interest for first 6 months. Very clear with this? Okay. So say for example, okay. For example, someone comes and asks the money in 4th month. Will he get his money? Yes, he will get his money. Okay, but will he get any interest along with it? Answer is. Are you clear with this? Okay. Acha, ma'am, what if someone comes and asks the money after 6 months? Means before expiry, before 60 months, but after 6 months. Ma'am, now will he get the interest for the full period? Answer is, first of all, he will get no interest for 6 months. That is one thing. Okay, he will get no interest for the first 6 months, and later the interest that he is going to get will be at a lesser rate of interest, whatever is the rate of interest, minus 2%. Means whatever was the agreed rate of interest minus 2%. If he is redeeming it before maturity. This is premature penalty. Okay, this is premature penalty. So did you understand what penalty are we getting it here? Suppose if you ask the money in the first 3 months, you're not going to get it at all. Forget about interest. Okay. Then after that, suppose say for example, if you ask it in the period of between 3 months to 6 months, then they will give you money, but you're not going to get any interest because no interest can be paid up to a period of 6 months. Okay. Suppose if I ask it beyond 6 months, but before expiry, then first of all, for the first 6 months, I'm not going to get any interest. Later, I will get the interest, but at a reduced rate. And suppose if I wait till maturity, okay, suppose if I wait till maturity, then I will get everything. Are you clear with this, everyone? Okay, but one simple thing that they have told you here is, suppose if the depositor has passed away, then it is going to be paid to his nominee or his legal heir, etc. And in that case, nothing will be deducted. He will be paid everything normally. Okay, he will be paid everything normally. Very clear with this? Yes, so just let's try to summarize this once. First of all, we started with these 3 types of deposit: saving deposit, recurring deposit, fixed deposit. Saving deposit can be for any period, because what happens in saving deposit is you can anytime go and keep your money, anytime go and withdraw your money. Okay, but for the purpose of paying interest, your balance will be anytime considered as 1 lakh rupee only. Your more money is kept in their account, that is okay with them, that is okay, but for the purpose of paying interest, it will be considered as if you have just kept 1 lakh with them. And the rate of interest that we can pay on savings is normal bank interest, normal nationalized bank saving interest plus maximum 2%. Okay, for recurring and RD, these are the minimum time period for which you have to keep your money, or this is the time range for which you have to keep your money, and the rate of interest that we are going to pay on recurring deposit and fixed deposit is the rate which is fixed by the RBI. Okay, normally banks also accept recurring deposit, fixed deposit, so whatever is there, whatever the banks etc. give on RD/FD, that same rate will be applicable for Nidhi companies as well. Okay, then in case of maturity, what is going to happen in case of maturity? So in case of maturity, no money till 6 months, no interest till 6 months. Later, before expiry, then interest at a lower rate, that is normal rate minus 2%, and you will get everything if you are keeping the money till your maturity. I hope you are very, very clear till here, everyone. Yes. Okay, so let's go ahead now. Rule number 14 also partially we have completed. Let's try to understand this, everyone. Unencumbered term deposit. Do you recollect how much we had to keep in unencumbered term deposit? That was 10% of your outstanding deposits. Okay, whatever is your liability into 10%. Uska 10% you have to keep it separately, right? So that you have to keep with a scheduled commercial bank or post office deposit, and that should be 10% of the outstanding deposit. Ma'am, outstanding deposit of which day? So at the close of business on the last working day of the second preceding month. So suppose if I go and check it for the month of May, then the second preceding month will be March. right now, 1 month and 2 months. So as on whatever, suppose 31st March is the last working day of March, so as on 31st March, whatever was your outstanding deposit into 10%, that has to be maintained for the month of May. Got it? Okay. Suppose sometimes it is happening that you are not able to keep 10%, etc. Go and take the approval from the RD in form number NDH. See, wherever you have to take the approvals from the RD, it is going to be form number NDH2 and you have to go to the regional director. Okay, so simple. Rule number 14 said, what did rule number 14 say? That whatever is your outstanding deposit as on the second preceding month, last working day, whatever outstanding deposits are there on that particular day into 10% has to be kept in unencumbered term deposits for the current. Very clear with this? Yes. Okay. Then after that, going to the next rule, that is rule number 15, which talks about loans. Okay, till now we were doing about accepting the deposits. Now we are talking about giving of loans. We are going to give the loan only to our members, mutual benefit concept, right? Acha. In case of joint shareholders, it can be given only to our shareholders, na? So loan shall be provided to the members whose name appears first in the register of members. Say for example, it can be given, joint shareholding is of Mr. A and Mrs. A. So loan can be given only to Mr. A. Okay, now how much loan can we give? We cannot exceed our capacity. Okay, here also we can, just like we did it for deposits 1:20, here also we can give only limited loan, because the risk will be involved otherwise. So, to a single member, you can give a loan of 2 lakh if the total deposits that you have accepted from all of your members is less than 2 crore. Okay, I'll just make a table here. You will understand it very easily. This is your rule number 15. Okay, this is loan to each member. And this depends on total deposits accepted from members. This is total and this is each. Okay, so in this case, everyone here, just try to understand what is going to happen in this case. Suppose if the total deposits is less than rupees 2 crore, you can give rupees 2 lakh loan. Okay, suppose if it is more than 2 crore but less than 20 crore, then to each member you can give 7.5 lakh rupees of loan. Okay, problem area in the act. Ma'am, what if the total deposit accepted is exact 2 crore? So there is no explanation for this in the bare act as well. Okay, so either here you can take more than or equal to, or here you can take less than or equal to. So that is a problem with the act. So ideally you should not get any question on this exact 2 crore. Okay, then after that, suppose if it is more than 20 crore but it is less than 50 crore, then in that case it is going to be 12 lakh rupees to each member you can give. And last, suppose it is going to be more than 50 crore, then in such a case to each member you can give a loan of rupees 15. So what amount of loan you can give to each member, that depends upon the total deposits that you have accepted from the members. Very, very clear with this. And suppose if the company has not at all made profits in the last 3 years continuously, means the company is a loss-making company for the last 3 years, then all these limits will be slashed to 50%. This loan limit will be slashed to 50%. Means if this is less than 2 crore, this will become 1 lakh. If this is more than or equal to 2 crore or between 20 crore, then this will become 3.75 lakh. That way. If the company is into losses for the last 3 years. Very, very clear with this, everyone? Okay, now one more thing. What if earlier loan was given to a particular person and he defaulted? Should we again give loan to him? Obviously, ma'am, no. So if someone has already done any default earlier, then no new loan can be given to him. Very clear with this, everyone? And whenever you go and check these deposits figure, this will be checked as on the latest audit, as per the latest audited financial statement. Acha. Now, another important thing is, whenever you're giving loan, are you going to take something as security? Yes, ma'am. Whenever we go and take loan from banks also, we give security, right? So, similarly here also, we are going to give security. Okay. What means Nidhi company will accept security and then only it will give the loan. Now, what all things can be considered as security? What all things can be considered as security? So it can be gold, silver, jewelry. Means I will take my gold, silver, jewelry and I will give it to the Nidhi company and I can take loan. Okay, but here loan period can be maximum 1 year. Loan period can be maximum 1 year. Means the loan has to be repaid within a time period of 1 year. Okay. Next, loan can be given against immovable property. Means I go and give my property papers to the Nidhi company and I take a loan. Okay, but one restriction here is, first of all, loan period will be maximum 7 years. Within means loan tenure can be of maximum, just like housing loan goes up to 20 years, etc. Also, similarly here, if we are giving any loan against immovable property, repayment period will be maximum 7 years. And from the point of view of Nidhi company, loans given against immovable property should not exceed 50% of. It should not exceed 50% of total loans. Okay, it should not exceed 50% of the total loans. Means some loan would be given against gold, silver, jewelry, some against immovable property, some against securities, etc. But this portion should not exceed 50%. Very clear with this? And also the loan amount should not exceed 50% of property value. Suppose if my house is of 2 crore rupees, loan should be maximum of 1 crore. Means they are securing themselves up to twice. Did you get that? Hey, did you understand the difference between this 50% and this 50%? This is individual loan given against a single property should not exceed 50% of that value, property value. And this is from the point of Nidhi company, that loan given against this category should not exceed 50% of the total loans. Okay. And last one, it can be given against fixed deposits, against NSEs, against government securities, against insurance policies, etc. The loan can be given against that also. But here the restriction is, whatever security, suppose if I have FD and I go to Nidhi and I say that please keep this as a security. Okay, so this should be pledged with Nidhi. First of all these should be pledged with Nidhi, and maturity date of this should not fall beyond the loan period. Suppose if the loan is of 5 years. Okay, if the loan, example, if loan is of 5 years, then maturity should be maturity of this should be 1 year or 5 years, whichever is earlier. 1 year is ad hoc, 5 year is the loan tenure. Did you understand this? Means these should get matured early itself. Before the loan tenure gets over, these should get matured so that Nidhi can realize the money from this. It will be pledged with Nidhi only, na? So if at all it gets matured, the money will come to Nidhi company only. Got it? Acha, but in case of FD, loan period should not go beyond the FD period. Means again, FD should get expired before the loan itself. Then only Nidhi will get the money. Very clear with this? For other securities, maturity period should be the loan period or 1 year, whichever is earlier. So whenever a Nidhi company is giving any loan, it can give against these 3 things. These are the restrictions applicable in case of loans. Right? And the rate of interest, when we are giving loan, the rate of interest is important because that is going to be our income. So that will be whatever we offer on deposits. Remember, we were offering on savings, recurring deposits, fixed deposits, whatever was the highest rate, okay, whatever was the highest rate that we offered on deposits plus 7.5%. Whatever was the highest rate that we offer on deposits plus 7.5%, this much you can charge on your loans. Okay, and for every person, the rate of interest should be same. It should not fluctuate. Okay, if Arpita is going, then this is the rate of interest. If you are going, then this is the rate of interest. No, it should not fluctuate. And that rate has to be put on the notice board of Nidhi company so that it is same for everyone. Are you clear with this? Yes, this rate of interest was given in rule number 16, just immediately after this. Here it is. Highest rate of interest plus 7.5. Are you clear with this, everyone? Okay, so then let's go ahead to the next rule, that is your rule number 17, which is talking about directors. This is important. So now they are coming on to the management thing, right? They are coming on to the management, that is they are coming on to the directors, board of directors. So any person who is a director, that person should be a member of Nidhi. Means he should be a shareholder of Nidhi. Okay, once he is appointed, he can hold office up to 10 consecutive years. Continuously 10 years, like that person can hold office. After that, there will be a cooling period of 2 years. After 10 years, there will be a cooling period of 2 years. And only after that, he can be again reappointed for the 10 years again. So 10, serve a cooling period of 2 years, again you can come into picture. Okay. Acha, suppose if after 10 years central government says that you can continue for 1 more year, then that person can continue. If central government has not said anything, then 10 years plus 2 years ka cooling period. Very clear with this? Acha, normal DIN provisions, disqualification provisions of directors. DIN provisions will come under section 152. Disqualification provisions will come under section 164. Just like it is applicable to every other director, it is also applicable to the director of the Nidhi company. Okay, so 2 things are very, very important here. One is that director should also be a member of Nidhi company, and next is his tenure. What was the tenure? Tenure of a director of a Nidhi company will be 10 years, 10 consecutive years. After that, there has to be a cooling period of 2 years. Yes? Okay. Then after that, going on to rule number 18. Okay, going on to rule number 18, this got amended. Okay, so you have to do the corresponding changes while doing your question answers and MCQs also. That a Nidhi shall not declare dividend exceeding 25% in a financial year. Earlier, there were certain conditions that it can declare beyond 25%, etc. Now, they have made a flat rule. It cannot go beyond 25%. Very, very clear with this, everyone? Okay. Next, last 3 rules. Rule number 19, 21 and 24. Rule number 19 talks about auditor. Okay, it talks about auditor of a Nidhi company. So again, if an individual auditor is appointed, he can act for 1 term of 5 years. If a firm of auditors are appointed, then 2 terms of 5 years each. And after that, if they want to come again, there is again going to be a cooling period of 2 years, just like it was there for the directors now. Okay, so you can remember it in this way. In Nidhi company, cooling period for director and auditor is going to be 2 years only. Okay, and auditor will write in his report whether Nidhi has complied with everything or not. Okay, so individual auditor, 1 term of 5 years, firm of auditor, 2 terms of 5 years each. And then the cooling period of 2 years. So now let's take it ahead to the next one, rule number 21, that is half yearly return, every year's compliance. This is form NDH3, you have to file it. You have to file this half yearly return with the ROC along with fees within 30 days from that half year end, and that will be certified by CA, CS or cost accountant. Okay, so in NDH3, basically that half yearly return has to be filed. And then the last one, penalty for non-compliance. If Nidhi does not comply with any of the provisions or any of the rules that we have studied, then the company and every officer of this Nidhi company, obviously who is the defaulting one, will be punishable with fine which can go up to 5,000 rupees. And if it is a continuing one, then this is applicable anyway, plus 500 rupees per day will be applicable. 5,000 plus 500 per day. Are you very clear with this, everyone? Okay, if you just bifurcate 1111 rule and then study, then only it will become important. Otherwise, go Goa gone. Okay, so just bifurcate 1111 rule and then only study it. And yes, now whenever you do the question answers MCQ, make sure that you do as per the amended provisions. Okay, make sure that you do as per the amended provisions. Mainly it is, one is your minimum equity share capital, another one is your net owned funds, and another one is that dividend thing. Dividend beyond 25% is not allowed. So make sure that you consider those things and do it.